Today, we will talk about the Generation Skipping Transfer Tax, GSTT. The Generation Skipping Transfer Tax is a federal tax on a gift or inheritance that prevents the donor from avoiding estate taxes by skipping children in favor of grandchildren. With the Generation Skipping Transfer Tax, grandchildren receive the same amount as if the inheritance were coming from their parents. The Generation Skipping Transfer Tax is an additional tax on a transfer of property that skips a generation, known as a Generation Skipping Transfer, GST, for short. The GSTT was implemented to prevent families from avoiding the estate tax for one or more generations by making gifts or bequests directly to grandchildren or great-grandchildren. The person giving the gift is referred to as the transferor and the recipient is known as the skip person. Many people use a grandchild as a skip person, but a skip person does not have to be a family member. Any individual is eligible to receive a generation skipping transfer as long as they are at least 37.5 years younger than the transferor. The taxation of a GST depends on whether the transfer is a direct or an indirect skip. A direct skip is a property transfer that's subject to an estate or gift tax. The GSTT tax rate is a flat 40%. An indirect skip involves a transfer that has intermediate steps before reaching a skip person. There are two types of indirect skips, the taxable termination and the taxable distribution. In the past, the GSTT has been hefty, ranging from 35% to 77%. The current rate, which has been in effect since 2014, is 40%. For 2022, the federal estate, gift, and GSTT exemption is $12.06 million for each individual and $24.12 million for married couples, more than doubling the pre-TCJA limit of $5.49 million. Most beneficiaries will avoid the GST tax because the estates they inherit will be worth less than the government-provided estate tax credit. However, in cases where the tax could apply, transferors can create dynasty trusts, which are designed to avoid or minimize estate taxes with each generational transfer. The generation skipping transfer tax is triggered when a person gifts another person an asset but skips a generation in doing so. For example, when a person gifts a home to their grandchild and skips their child. The generation skipping transfer tax is paid by either the grantor or the skipped beneficiary. The grantor pays the direct generation skipping tax while an indirect generation skipping tax is paid by the skipped beneficiary. A parent can gift a child tax-free $16,000 in 2022. In 2023, the amount is $17,000. This is per parent and per recipient. Here are 4 key takeaways. 1. The Generation Skipping Transfer Tax, GSTT, is a federal tax that results when there is a transfer of property by gift or inheritance to a beneficiary, other than a spouse, who is at least 37.5 years younger than the donor. 2. The GSTT effectively closed the loophole that allowed wealthy individuals to legally gift money and bequeath property to their grandchildren without paying federal estate taxes. 3. The GSTT tax rate is a flat 40%. 4. Most people will never encounter the GSTT because of the high threshold. The tax only applies when the transferred amount exceeds $12.06 million per individual for 2022 and $12.92 million for 2023. Hope this would help. Thanks for watching.